Hi there, welcome to GrainTV. I'm Kevin McNew. It's Friday, February 5th. We had a down day with a lot of red across the board. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was off 3 cents a bushel, beans losing 7, and Chicago wheat off 6 cents a bushel. In the news today, let's start first with the general economic news. The federal report on employment and jobs was a bit of a mixed bag. On the one hand, unemployment did tick down from last month's reading of 5% to this month's reading of 4.9%, somewhat supportive, but the number of new jobs added in the last month's report was well below expectations, coming in at only 151,000 jobs versus expectations of 171 to 240,000. So that got the dollar on a sort of recovery mood because the dollar has been trading a very weak economy. So the jobs that were actually not horrible at 151,000 got the dollar somewhat of a recovery mode. But on the other hand, stocks took it on the chin to start the day, and as of this time, with about an hour and a half left in trading, we're down 2% on the S&P, so that's not positive for the broader economy. Let's turn now to the agricultural news. There wasn't much news out today. We're still sort of feeling the effects of yesterday's poor export sales report, but there's very little to also gravitate us to the really low prices that we saw early in 2016. News out of China, we did see their DDG exports for the month continue to slide for the 6th month in a row. That's not a big surprise because we know China has said they're going to cut back substantially on U.S. DDG imports, but that is problematic for sort of the long-term health of the ethanol industry, which is already struggling with, at best, break-even margins, if not margins that are below water. So if DDG prices start to slump, that tilts that equation to more negative or more red for those ethanol producers. Speaking of the cash market, let's take a look at cash basis for the week. We did actually see some movement in soybeans where basis levels were off 2 cents a bushel. We had a fairly strong week in soybean futures. We suspect that probably got some cash movement going. We're also seeing some weakness out of the Gulf, where Gulf bids were off 10 cents a bushel. River terminals were off as much as 10 to 15 cents at some particular locations. The one bright spot tends to be on the eastern seaboard, where we're seeing some of the crushers there start to increase their basis. They've been pretty much flatlined since the harvest, not needing to increase basis. So we're seeing a little bit of a response from those buyers trying to get beans out of the farmer hands. In corn, very little movement on corn basis. It was overall flat on the week. We did see some improvement in the western corn belt, probably as a result of the blizzard, especially in Nebraska, that slowed farmer movement. Again, like the case of soybeans, we're seeing a bit of weakness at the Gulf and filtering through to the river terminals. Let's switch gears and take a look at the technical markets for corn futures, and in particular, we have been in this fairly narrow trade range, and we're now breaking down to the bottom end of that at that 365 mark. Where you really want to focus your attention on March corn is 364. That's a critical mark because we have to go all the way back to January 19th when we set a gap in the chart, on the 4-hour chart, coming in from the week on January 19th, starting a Sunday and gapping higher. That has been the overarching or overlying support for this market. And so watch for that next week. If we break below 364, then I suspect we're going to continue to drift lower. And I wouldn't be surprised to see us do so with the dollar increasing in value today. I think the slide in the dollar may have at least found a temporary bottom, so that's not going to be very supportive for the grains and in particular corn. That's all we got for this week. Have a great weekend, and we'll see you on Monday on GrainTV.